Right, now how I have divided my presentation today is basically we are going to first look into those tax notifications where there have been amendments to the rules and procedures. Then we would look at the changes in terms of rate, in terms of exemptions. So we would look at rate notifications. And towards the end, we would look at the circular. So this is how the presentation has been divided for today. So when we look at the notifications which have been issued when it comes to the procedural aspects, we have notification number 9 of 2022 through notification 16 of 2022, which have been issued after the 47th GST Council. In my session today, I would not be deliberating on notification 11 of 2022 and 12 of 2022 because the due dates for the compliances of these notifications have already been expired. So I am ignoring those two notifications for today's discussion. We'll start with the discussion on notification number 9. I normally do not prepare presentations giving much emphasis on the numbers and the sections, but because the crowd which I'm addressing today is the member of the Chamber of Tax Consultants, so therefore I have given much importance to the sections and to the provisions which are there in the law. So notification number 9 of 2022 is basically notifying section 1, clause C of section 110 of the Finance Act 2022. So basically Finance Act 2022, once it received the presidential assent, not all the sections were operational, not all the sections were notified to be applicable immediately after the presidential assent. Certain sections between 100 to 114, section 100 to section 114 of the Finance Act 2022 were to be applicable only from the date that they were notified. So there are certain sections even currently which you will find are not yet notified. Now, clause C of section 110 of Finance Act 2022 basically amends section 49 subsection 10 of CGST Act. Now, what is section 49 subsection 10 of CGST Act? This is talking about the transfer of balances from your electronic cash ledger. So if you recollect in 2019, Wide Finance Act 2019, there was an amendment which was brought in the law, so to say that you are able to transfer between the heads, intersay in the heads, between IGST, CGST, SGST and the other, you are able to transfer the balances in the same registration, within the same registration. Now the amendment has been brought to also include that these balances can be transferred amongst the distinct persons. So therefore, the earlier section has been substituted and the new section has been now added. We also need to refer to notification 14 of 2022 in this regard, because 14 of 2022 prescribes the methodology in which you would be able to transfer these electronic cash ledger balances to a distinct person. So this is one change which is brought out by notification 9 of 2022. The second change which is brought out by this notification is regarding the interest on reversal of excess availment of input tax credit. Much awaited change, a welcome move by what department has, what the government has done. So it has retrospectively amended section 50 subsection 3 of the CGST Act, wide section 111 of the Finance Act 2022, which is regarding the availment and utilization of input tax credit, and therefore interest is not payable merely upon availment of input tax credit unless it is utilized. They have also inserted Rule 88B to the CGST rules to further prescribe the methodologies in which interest has to be computed. So if you look at amendment to section 49 subsection 10 read with Rule 87 sub Rule 14 of the CGST rules, it says that you can transfer any amount of tax, interest, penalty, fee or any other amount available in the electronic cash ledger to the electronic cash ledger for integrated tax, central tax, state tax, union territory tax or cess So that is within the same registration, what you can transfer. That is one part which was notified earlier as well. The second part which is now notified is integrated tax or central tax of the distinct person within the same state or UT or another state or UT. So you are able to also transfer the balances of integrated tax or central tax to the within the same union territory or in another union territory. What is the condition? The condition is that you will not be allowed to make such transfer if you have any unpaid liability in your electronic liability ledger. So if there is any liability in the ledger of the transferor, then he will not be able to transfer these balances unless those liabilities are settled. Now, to operate, give effect to these changes, the amendment has been made to the existing form PMT09. This was the existing form which was available for the transfer of balances, to which they have made the changes to incorporate that you can now transfer to a distinct person as well. So those particular fields have been amended. Now, the second change which we discussed was the interest on wrongful availment and utilization of input tax credit. Now, this interest has become very interesting in GST, as I say, because too many changes around this section, around this provisions, too much of drama around it in the initial period of the launch of GST as well. Now, amendment to section 50 subsection 3 read with rule 88B of the CGST rules talks about where the input tax credit has been wrongly availed and utilized, the interest has to be paid at such rate as may be prescribed. Now, the question arises that when is it that you would be said to be utilizing this input tax credit, and until what date are you required to pay the interest? So when is it that it would be said that you have utilized the input tax credit? So it says that the input tax credit wrongly availed shall be construed to have been utilized when the balance in electronic credit ledger falls below the amount of input tax credit wrongly availed, and the extent of such utilization of input tax credit shall be amount by which the balance in electronic credit ledger falls below the amount of input tax credit wrongly availed. So simply to say that if you have availed any credit and the balance in your ledger has fallen below that limit which you have wrongly availed, that is the moment and that is the amount by which you would be said to have utilized the credit. If we go back to the case of Pratibha processors by the Supreme Court, it clearly said that interest is compensatory in nature, and therefore the government must be compensated only from such date when the balance in the electronic credit ledger falls below the threshold limit. Now, this gives rise to two questions over here. Now, what is said to be below the utilization level? So you have to look at CGST, SGST and IGST in isolation, or you would have to look at it all together. So what is that is expected out of the assessee? Because when you look at the definition of input tax credit means input tax, and input tax means central tax, UT tax, etc. So therefore, whether you will look at the overall balances, because there are certain predetermined rules in place which require you to do the utilization in a specific order, and it is not under your control that you can utilize as per your wish. So therefore, with that backdrop, what is it that would be considered by the department is something one has to look at. Currently, we are handling one show cause notice where we have taken the ground that although we have exhausted the balance of CGST, but there was a sufficient balance of IGST which was available on record. I'm open to hear your views on this matter. Now, the second question arises is the date of utilization of the input tax credit. So when is it that you would have been said to utilize the input tax credit? So it says the date on which return is due to be furnished under section 39, or the actual date of the said return, whichever is earlier, on account of payment of tax through the said return. So whenever, whichever return you would have said to have utilized, or the balance has gone below the threshold, the due date of such return would be the date on which it would be considered as the date of utilization, or the date on which you file, whichever is earlier. In all other cases, the date of debit in the electronic credit ledger, so whenever there is a debit in your electronic credit ledger, in all other cases, that would be the date on which it is supposed to be utilized. Now, if you look at the rate of interest which has been prescribed, so rate of interest was prescribed by the Finance Act 2022, via Section 116, which became operative immediately upon the assent of the bill by the President. So Section 116 prescribes the rate of interest under the 6th schedule at 18%. So earlier the rate of interest was 24%, which was retrospectively amended to 18%. So if there are any cases where you have paid the tax at 24%, you can definitely go ahead and apply for refund, because the rate of interest has been retrospectively changed to 18% with effect from July 1st, 2017. Though there are not much cases where interest would have been paid, but yes, initial audits which had started at least in Telangana, which had started, the department insisted to pay tax at 24%. So that can be one aspect which can be looked at. Now moving to the next notification, number 10 of 2022. This talks about the exemption from filing of annual return for financial year 21-22, where your aggregate annual turnover is less than or equal to 2 crores. So this exemption has been continuing over the years, and it is continuing even for the financial year 21-22. I would urge that if it is not too much of a hardship, it is better to file the annual return rather than claim exemption from this, because you'll be able to clearly demonstrate in case of show cause notices which would be issued in future. You'll be able to at least demonstrate that there has been no suppression or willful misstatement, etc. This might come in handy at that point of time. So therefore, accordingly, although it is exempted, but you can definitely look at suo motu filing of this return. Notification 13 of 22, 11 and 12, as I discussed, we have skipped. Notification 13 of 2022, it talks about the extension of time limits. Now, the GST Council had recommended, so there were two folds extension of time limits, one which were from the perspective of the department and the other which was from the perspective of the assessee. So from the perspective of the department, the time limit which was specified for recovery of tax not paid or short paid, or of input tax wrongly availed or utilized, under a normal period of limitation, that is not under an extended period of limitation, was expiring soon. So therefore, they have extended this time limit. The second, the other two things which has been done by virtue of this notification is the period between March 1, 2020 to February 28, 2022 is deemed to have been excluded when you compute your period of limitation for recovery of erroneous refund. So if a refund has been issued by the department prior to March 1, 2020, then in that case, the period of limitation said that the time limit was available for 3 years from the date of such erroneous refund. But now what it is saying is that you will not consider the period between March 1, 2020 to Feb 2022. So good 2 years you are not going to consider for the purpose of recovery of an erroneous refund which was granted. The second is, in case of similarly, the limitation for filing of refund claim is 2 years from the relevant date. So again, the 2 years between March 1, 2020 to Feb 28, 2022 will not be considered. So when it comes to refund filing, I think this is much more welcome move than what Supreme Court had expected. Supreme Court expected by virtue of its order, which it had passed in January of 2022, it said that from the end of February, from March 2022, within 90 days, you will have the limitation window within which you will be able to file the refund claims which were lapsed during the the COVID period between 15 March 2020. So that is what Supreme Court had said. But I think this is much more welcome move by the GST Council to say that the period, these 2 years, we will not consider it for the purpose of computing the limitation period of 2 years. Now, the first thing which we were discussing, the time limit for recovery. So if you look at it, we had filed the 17-18 annual return was filed in February 5th and 7th in different states, depending on the state. So there was 3 years time limit to issue an adjudication order under the normal circumstances. So that 3 years would expire on February 5th and 6th of 2023. What has now been done, it has been extended to September 30, 2023. So therefore, the order has to be issued on or before September 30th of 2023, meaning thereby that a show cause notice has to be issued at least 3 months before the date of the order. So that is the last date for issue of show cause notice would be June 30th, 2023. So it is giving a department a comfortable window for completion of audits. But I still feel this is very less time compared to what otherwise they would require in case of erroneous refund, for example. So when you compare these two, the time limit which they've extended is marginally high, but not that great in terms of the coverage of the assessees for the audit. Nonetheless, this is what it is. Now, notification 14 of 2022. Notification 14 of 2022 is the first amendment. We start this year with the first big bang amendment of the CGST rules, wide 14 of 2022. So this amends the CGST rules. There are various sub rules which have various rules which have been amended, which I have listed in this, and we will go through it one after the other. The first amendment is to Rule 21A. Rule 21A talks about deemed revocation of suspension of GST registration. Now, the provisions for cancellation or revocation of GST registrations are contained in Section 29 of the Act. The Section 29 of the Act is set to is amended by the Section 101 of Finance Act 2022, which is not yet notified. Now, what are the two clauses? There is clause B and clause C in 29 subsection 2. Clause B deals with the composition dealers. So basically those who are liable to pay tax under section 10. In their case, if they have not furnished the returns for 3 consecutive tax periods, which is now amended to say that you have not filed your return within 3 months from the end of the financial year. Because you know that in case of composition dealer, you have to file form GSTR-4 only once every year, and the payments are made by CMP 08 every quarter. So clause B, which was at the time of GST inception, which was inserted, is now being amended by Finance Act 2022, yet to be notified. Now, clause C of this particular provision states that any registered person who has not furnished return for a continuous period of 6 months. Now, this period of 6 months has been removed, and it is said that such period as may be prescribed. So as of now, currently as we speak, any registered person who has not furnished a return for continuous period of 6 months, only in those cases, there can be only in that case there can be a revocation of there can be a suspension of the GST registration. So what this provision says is that if the registration has been suspended and between the suspension period you have filed the returns, whatever are the pending returns which were there, all those returns have been filed, then automatically your suspension is deemed to have been revoked. So therefore, it is an automatic revocation of the suspension of GST registration, which is again a more easier route than to coordinate with the department. So limiting your interaction with the department. The next one, so this is Rule 21A. The next amendment is regarding Rule 43, Rule 42, 43 basically. It is added to the explanation to Rule 43, which says that for the purpose of Rule 42 and this rule, it is hereby clarified that the aggregate value of exempt supplies shall exclude the value of supply of duty credit scrips. So as we all know that the duty credit scripts such as SEIS, MEIS scripts or the other scripts, these scripts are tradable. these were classified as goods, and they were exempt, they were liable to tax until 12th of October 2017. Then on 13th of October 2017, notification was issued and it was exempted under HSN code 4907, and then they exempted the duty credit scripts from GST. The other scripts are still liable, you know, the renewable energy scripts and all other scripts which are there are still liable to GST, but duty credit script is exempted from GST. Now, what majority of us did was, because this duty credit script was exempt supply under GST, we went ahead and did a Rule 42 or a 43 reversal as may be required, you know, for common credits or common inputs which were used. Now, this particular provision, what it does, it gives a it does a clarifying amendment. It is silent on whether it is retrospective or prospective. But the way it is worded, it's explanation one says it is hereby clarified. Now, according to me, when you say it is hereby clarified, it means that something which was obvious per law, but, you know, by virtue of abundant caution, the legislature is clarifying it. So I've given reference of two particular things which can be used here. One is the extract from the Principle of Statutory Interpretation by Justice G.P. Singh. And the second is the case of Fair Deal Motors by the Jammu and Kashmir High Court, where it said that an explanatory act is generally passed to supply an obvious omission or to clear up doubts as to the meaning of the provision. And it is, and in Jammu and Kashmir High Court held in case of Fair Deal Motors that it is clear, therefore, that if it is a beneficial procedural section, that could be attributed retrospectivity without the legislature itself giving a retrospective operation to such beneficial procedural section. So based on this, according to me, a refund claims can be applied now that even the relevant date for refund claims have been extended because of excluding 2 years. I think it is a fair chance to apply for refund claims wherever any reversal of input tax credit has been done on the value of the duty credit scripts. Then moving to Rule 46, a declaration where e-invoice is not required to be issued. So even as we speak, we know that yesterday a notification has been issued, and now with effect from 1st of October 2022, the average, the annual aggregate turnover is reduced from 20 crores to 10 crores. Now, what is this particular rule talking about? This Rule 46 in the tax invoice, they are asking to, you know, add a declaration which says that we hereby declare that though our aggregate turnover in the preceding years from 17-18 onwards is more than the aggregate turnover notified under sub-rule 4 of Rule 48, we are not required to prepare an invoice in terms of the provisions of the said sub-rule. So we are not required to prepare an invoice in terms of Rule 48 sub-rule 4. In what cases are you not required to prepare an e-invoice? There are 6 cases which have been specified. Under Rule 46, basically the government department, local authority, special economic zone unit, insurance, banking company, financial institutions, goods transport agencies, passenger transportation service, admission to cinematograph films in multiplex screens, etc. So in all these cases, you are required to give this declaration that you are not issuing e-invoice because you are not required to in terms of those rules, even though your aggregate turnover exceeds that particular limit. So I think it's a more of an abundant caution kind of a provision, though procedural, but required to be complied with immediate effect. Now, Rule 86. So this is about Rule 46, the declaration which is to be added. Then we move on to Rule 86. Rule 86 is basically regarding the erroneous refund which is sanctioned. So you where a registered person deposits the amount of erroneous refund sanction. So there is an amount which is demanded that you have been erroneously refunded, and you forthwith deposit that amount along with interest and penalty through Form DRC-03. Now the question was that how do you get back the credit of this particular tax which you have paid in cash now because although you may not be entitled for the refund claim, but you were very much entitled for the input tax credit. And even if it is said that you are not entitled for input tax credit, then the provisions of section 73 and 74 have to be followed for demanding such input tax credit. So therefore, in the interim, how does it come back to the ledger, electronic credit ledger of the registered person? There they say they have notified form GST PMT03A, and by virtue of circular 174, they have said that preferably within 30 days of the date of receipt of the amount from the taxpayer, the amount must be recredited to his credit ledger, though there is no prescription of the time in the law, but the circular preferably specifies 30 days is the time limit within which it should be given back into your ledger. Now, I think it's a drafting issue, but what I found was that Rule 86(4)(b) refers to section 54 subsection 3, which pretty much takes care of the refund scenarios which are available under GST. There was no specific requirement to mention 9610 further, according to me. That is my humble submission here, that only clause A was sufficient and you need not have to refer to the sub rule over here in Rule 86(4)(b). This you will find at a lot of places in GST when we discuss further provisions also. Some places I will highlight where, according to me, the place where amendment was bought or the amendment which was bought was not required at a lot of times. For instance, you look at Rule 88B. Rule 88B actually has 3 clauses. 1 and 2 is basically with regards to the interest under section 50 subsection 1, which is your regular output tax, and this provision clause 3 is regarding the input tax credit wrongly availed and utilized. So we have discussed about this when we discussed notification 9 of 2022. That time we discussed about Rule 88B and what it talks about in terms of when it is deemed to have been utilized and until what date, on what date it is said to have been utilized. So while a clarification on that aspect was required, but when you look at clauses 1 and 2, pretty much section 50 subsection 1 clarifies this. Section 50 subsection 1 and the provision to section 50 subsection 1 pretty much clarifies that until what period you are required to compute the interest. Once again, it has been reiterated in Rule 88B. Now, what it is said with regards to interest under 50 subsection 1, I'd just like to clarify it with a simple example. Say, for example, I am due to file return for the month of July 2022 by August 2022. Now, I have filed this return, say, on September 1st of 2022. So there is a delay of about 10 days in filing of the return. So this provision says that you are required to compute the interest for this delay period of 10 days on such amount which has been paid by you using the electronic credit ledger. Now, till here, we are all pretty much clear. We do not have any doubts. However, the provisions under 50 subsection 1 as well as Rule 88B also clarify that this benefit of paying the interest on the net basis will not be available after commencement of any proceedings under 73 or 74. Now, what is commencement of proceedings under 73 and 74 is nowhere clarified as of now. But commencement of proceedings under 73 and 74, according to me, would be the date of issue of show cause notice, the date on which you have received the show cause notice, the date of communication of the show cause notice. So if you have paid any taxes before the date of such communication, then you would be entitled for net basis. Otherwise, you would have to do it on gross basis. The second scenario is that I have filed my return for July of 2022 within the due date, but I realize in the month of August 2022 that I have forgotten or I have inadvertently not reported certain invoices which were issued in the month of July 2022. So now what I do is I include them as part of my August 22 return. Now, in that case, would you still be able to pay on net basis even though you had a credit balance in your ledger which covered the pretty much output tax of these missed input tax credit? The answer, according to me, is no. you would have to pay the interest on this from 20th of August 2022. So I hope the 3-4 scenarios which we have discussed on interest are pretty much clear. If there are any doubts, you're more than welcome to put it on the chat box or the Q&A, and we'll take it up in the end. Now, Rule 89. Rule 89, basically, there are multiple amendments which have happened under Rule 89. One is a very basic amendment about the definition of specified officer, because a lot of times, you know, the special economic zones, many special economic zones together have one specified officer, while each economic zone has an authorized officer. So it becomes very difficult when you say specified officer under special economic zone. Then you actually tend to look at an SO perspective, which is very difficult to get the time, you know, the approval from the SO because of the time factor and the limitation factor. So there they have clarified that specified officer here means the specified officer or the authorized officer, AO under the special economic zone. The second amendment which has been brought under Rule 89 is regarding the value of exported goods. So value of exported goods, Rule 89(4) specifies that value of goods exported out of India shall be the free on board value declared in shipping bill or bill of export, or the value declared in tax invoice or bill of supply, whichever is less. Now, the convenience with which the amendment is brought out under GST law, to me sometimes amuses me with the kind of ease it is brought out, because how conveniently under Rule 89, you actually override the provisions of Section 15 of the Act. Section 15 of the Act talks about what is the value of goods under GST law. Now, how is that value impacted by what is my valuation as per the customs provisions? These two are independent provisions and they should not be interlinked, though there might be certain reasons why they have done so. Well, but then whether the rule can override the section is something which one needs to look at. And to lot of changes which have happened in GST, whether you talk about the real estate sector, whether you talk about the restaurant sector, and now about GTA when we talk about it, all of these, I think somewhere the law committee needs to look at it, that whether the way the amendments have been brought out, whether they are actually valid the way they have been brought out. All right, moving further, Rule 89 also talks about the amendment to the inverted duty structure. So refund computation on account of inverted duty structure has been a subject matter of litigation since the inception of the GST law, which was finally settled in the case of VKC Footsteps India Private Limited, where Supreme Court held that the provisions of Rule 89 are very much valid and they are not contradictory to the provisions of Section 54(3). So in this particular ruling, Supreme Court said that the court cannot replace the wisdom of the legislature, but it definitely gave a guidance to the GST Council and said that they must reconsider the formula and take a policy decision regarding the same. So based on this decision of the VKC Footsteps India Private Limited, an amendment is now proposed in the provisions for computation of the refund on account of inverted duty structure. So if you look at my turnover of inverted, in this illustration, my turnover of inverted rated supply of goods and services says 1 crore. My adjusted total turnover is 3 crores. The total tax which is payable on this inverted rated supply is 5 lakhs at 5%. And the net ITC available to me is 20 lakhs. Now the net ITC for the purpose of this rule only means the inputs and not input services. So then net ITC is 20 lakhs and ITC availed on input and input services is 25 lakhs. Now how does it play? Under the old or hitherto provisions, you had the turnover of the inverted duty goods or services divided by the turnover of the total adjusted turnover, multiplied with your net ITC, which was 20 lakhs, minus the tax which you were to pay on the inverted duty supply. So therefore, in this particular case, my refund was restricted to 1,66,000 in this example. What change they have brought out now is that this 5 lakh which you are paying, they're trying to apportion it between how much of it is from the input and how much it is from the input services in that pro rata basis. And therefore, this 5 lakhs is then apportioned between 20 lakh divided by 25 lakhs. So therefore, now your refund increases from 1,66,000 to 2,66,667. Ideally, according to me, they should have said, according to majority of the industry, the net ITC itself should have been defined to include input and input services, which would be the best case scenario. Capital goods hota to it would be even better, but anyways, that is too much of an ask. At least input and input services, so 25 lakhs should have been there over there, and then you would have got a little more higher refund of 3,33,000. But nonetheless, whatever is given is a boon and must be accepted without much ado. Now, Circular 173 is issued with regards to inverted duty structure, not directly on this issue, but because it was a related circular, so I have put it here. Circular 173 clarifies basically that when you talk about an inverted rated structure, whether the concessional rate notification will also be included. So in case, say for example, though the tax as per the particular tariff is higher, but because of an exemption or a concessional rate notification, the tax has been notified to at a lower rate, then in that case, whether those will still be covered under an inverted duty structure. So the clarification is now given that yes, it would be considered as an inverted duty structure, even though it is by way of a concessional rate notification. Though I feel the time at which it has come, it might help with the prior periods, but time at which now it has come, majority of the concessional rates, as you will see, have been removed. Majority of the cases, I wouldn't say all the cases, majority of the cases, the concessional rates have been removed by rate rationalization, as they say. Okay. Now moving on to Rule 96. Rule 96 basically prescribes scenarios in which your refund can be withheld. Currently, it talks about two scenarios, that is prior to this amendment. A request is received from the jurisdictional commissioner to withhold the payment of refund. That is one scenario. Second scenario is the proper officer of customs determines that the goods were exported in violation of Customs Act. So under these two scenarios, withholding the refund was possible under Rule 96. Now they have inserted a third criteria to say that the commissioner or an officer by the board on verification of the data and risk parameters is of the opinion that the exporter is a risky exporter, and therefore it is important to do a thorough verification before granting the refund claim. So in that case also your refund under Rule 96 will be withheld. Now, after it is withheld, there is a further amendment which has been made in this provisions to say how it is going to be dealt with further. Merely withholding the refund claim is not the option. The refund claim has to then be transmitted to your jurisdictional officer so that the jurisdictional officer can process it as though it was a refund claim under Rule 89. So those related amendments have been made to Rule 96 of the CGST rules. Apart from this, amendments have been made to GSTR-3B, amendments have been made to GSTR-9, PMT-09, all of those forms. I'm discussing about the key changes which have been made under GSTR-3B and the other procedural changes which have happened in GSTR-9. 3B, I think state of Telangana, I'm not sure about the other states, but state of Telangana happens to be one state where notices were issued to almost all the assessees to, kind of give the detailed breakup of their input tax credit, because it was difficult to settle the balances between center and state in terms of what balance was supposed to be received by the state of Telangana. And therefore, that was causing a lot of hardship in the finances. So therefore, the department then started to write a letter to the assessees that, please give us the breakup of the input tax credit, which you've not claimed or, which is ineligible, etc. And where the place of supply is Telangana. So those kind of notices were issued, and not less time we find that a similar thing was put up before the GST Council, and Council has then suggested a lot of changes which have happened in this form, which was much awaited from a long time. Though if they could have also included the option of one-time revision of this form, then it would be Sone Pe Suhaga, but that has not happened. The revision of 3B is not possible. You cannot revise the 3B, but yes, the form has undergone some changes. So with regards to key change which has happened, one of the key change which has happened is with regards to these tax which is payable by the electronic commerce operator. Basically, in case of services, the electronic commerce operator is required to pay the tax under reverse charge. So what they have done is that they have inserted a new table called 3.1.1, where you have to give the disclosure of the taxable supplies, which have been made through an e-commerce operator, on which e-commerce operator is required to be required to pay the tax under reverse charge mechanism. Then there is a major change which has happened with regards to the disclosure of input tax credit. I think you really need to sit down for this for your clients and assess the way you're going to take it forward, because it's going to be different in each case. There cannot be a straight jacket way in which you will be able to do it. A lot of confusions, because one is your rule, one is your statement to be, then the other is that your clients do not record all the input tax credit in their books. Whatever is ineligible credit, often we kind of charge it off, although you may have given your GST number to the supplier, but because it's not an eligible input tax credit, you've actually not made a note of it in your books and you have charged it off. So that detail is not even available at the first place with you. So those are the kind of challenges which are there in when it comes to the input tax credit availed. So what it says is that basically, if we were to distinguish, it talks about reversals. Firstly, it talks about you cannot disclose the input tax credit on net basis. You have to disclose the total ITC, and from there you have to do deduction in two steps. One is the absolute reversal, and second is your temporary reversal. Absolute reversals are those reversals which once you reverse, you're not going to claim it back. So those could be reversals, say for example, in case of banking industry under Rule 38, where they are required to do a 50% reversal. Then there could be reversals under Rule 42, 43, or ineligible credit under Section 17(5). So these are absolute reversals or permanent reversals. So this have to be disclosed separately. Then there is a provision to disclose your temporary reversals, which is probably because it has not, there is a deferred credit. You have not received the goods, or you have not received the invoice for those goods or services. So accordingly, you're deferring that credit. Or there is a deferment because you have not made the payment to the vendor. So Rule 37 is triggered, and therefore there is a temporary reversal which is triggered. So temporary reversals have to be disclosed separately. Then whatever were these temporary reversals which you did in the earlier tax period, if you are reclaiming it back, you have to disclose it separately in your GSTR-3B. Apart from this, you have to disclose that credit which is barred because of place of supply provisions, especially when it comes to hotel accommodation, etc. It's in a different state. You're not able to take the input tax credit. So those kind of credits needs to be separately disclosed as ineligible input tax credit. So you cannot disclose any longer on net basis. So that is a very, very clear instructions by the amendment of this form. Now, another important thing which is required, which actually is there from the beginning, but it's kind of not followed because it's not compulsion to follow, but creating a lot of hardship again to the department in settling the amounts. When it comes to for example, the supplies which are made, interstate supplies which are made to an unregistered person, what is the place of supply? Those details are not included in GSTR-3B. Similarly, those supplies which are made to composition taxpayers or to UIN holders, place of supply wise has to be disclosed separately. And place of supply, first of all, has to be disclosed correctly. A lot of times, for example, if you take the case of Telangana, again, I would give it. Hyderabad, a lot of times, even now, the softwares classify them in Andhra Pradesh. although Hyderabad is now a part of Telangana. So I'm disclosing the wrong place of supply. Although it's Telangana, I'm disclosing the state as Andhra Pradesh. So what this particular circular, which has been issued 170 of 170/2022 with regards to furnishing of information for interstate supplies in GSTR-3B, asks you to take care of these things. It's an advisory note, but I think it's more of a compulsion. Otherwise, you would have to have other kind of procedures which the department is going to be after you, because this data is kind of very crucial to do the settlement of compensation between the states, etc. I think they should also, they've also given clarification about this ITC availed reversal and ineligible ITC, which I just discussed a little while before, also has been clearly clarified in the circular further. Right. So with this, we come to the end of the first part of my session, which was basically on the procedural amendments which have happened in the law, the procedural notifications. So before we move on to the rate notifications, if there are any questions, we can take it.
Yes, Radhika, there are few questions in Q&A. You can consider them. And there are also few people who have raised their hand. Okay, first we'll take the questions in Q&A.
Okay. Regarding credit reversals under Rule 43, if there are capital goods used commonly for business and non-business purpose, how to deal with it? Reversing 5% is sufficient or 100% is ineligible? So the provision clearly says that you should reverse 5% as of now when it comes to business and non-business use. 100% is not ineligible for sure. Like for example, if you take off a mobile phone, though there will be litigation on it, I'm not denying that fact. But since you say mobile phone is for business and non-business use and it's a capital goods, you can take 95% of that credit and 5% can be reversed. That is my view. I can assessee eligible for taking shelter from interest component on ITC wrongly utilized with regard to notifications. Srihari, not very clear. The question is not very clear. Can you please explain period of applicability of amendment in inverted duty structure refund? Period of applicability. This is a prospective amendment which has happened in the law. So it's a prospective amendment which has happened, Keshav. And Pavan is asking, in inverted duty formula, do we need to consider capital goods credit? No, you will not have to consider capital goods credit. You'll have to consider the net ITC availed on input and input services in the denominator. Mani, you have any other views on these questions? Then surely you can throw some light.
No, Radhika. No.
Okay.
Yeah, there are few others.
Yeah.
Yeah, I'm allowing Subramaniam Ram to talk.
Yes. Am I audible?
Yes, yes. Please continue.
There are two questions, madam. One is, you talk about absolute reversal. That is, rule number 42 or 43. In the absolute reversal, assuming that in rule 42, 43 in one particular month, I reversed excessively. So instead of 100 rupees, I reversed 200 rupees. Even in such situations, whether it is absolute reversal or can I make the adjustment in a subsequent month? This is the first question. The second question, in respect of place of supply, you told me that composition dealer, they are also required to, required to indicate the place of supply.
Supply is made to composition dealers.
Yeah. See, composition dealer, we know very well that section 10 says if you are in interstate supply, then in such a situation, you are not at all eligible under section 10. In such a situation, the composition dealer will be only CGST, HGST, correct?
No, so Subramaniam, so what it is talking about is you making supply to a composition dealer. So the composition dealer is now a recipient.
Correct.
You are the supplier. So composition dealer can purchase from interstate. There is no restriction on that.
Yes.
The restriction is on him not being able to make interstate supply. So therefore, because I am making an interstate supply to a composition dealer,
So
I
I
am
have to
required to disclose those details.
The first question, madam, that is absolute reversal.
So those questions only, according to me, if you ask me what the department is currently going to do, it's not going to basically allow you that credit because you have put it under absolute reversal. But whether that can take away your right merely because you have procedurally disclosed it, erroneously, I don't think so. A letter to the department should be made immediately once you understand that this error has happened and there is a time limit that you can avail this credit. So you should make a letter to your jurisdictional officer and you should be able to claim it back. Though you understand that mathematically things changes when it comes to settlement between the states and center. So that is where they are urging you to give a proper disclosure. So there might be issue with regards to that, but I think a disclosure to the jurisdictional officer by virtue of a letter should serve the purpose.
Okay, madam. Thank you.
Yeah.
Thank you, sir. Now I am allowing Preetham Mahankali. He has also posted his query in the Q&A box, Radhika.
Preetham, as I told my view that for wrong utilization or irregular utilization of credit, you may be able to see the total credit and not just isolation. But this is something to be clarified by the board, because the way the statement is used is input tax credit, and input tax credit is input tax, and input tax is CGST, SGST, or IGST, right?
Yeah.
So as the case may be. So according to me, Preetham, we should look at it on a consolidated basis and not an isolation basis, especially when you are compelled by the law. You're compelled by the law to utilize in a particular order.
Okay.
So that being the case, I've taken that ground in one of the show cause notices. I'm yet to see the result of it.
Okay, so similar thing I have also faced. So we have taken the total available, where we haven't seen isolation.
Yeah.
We haven't seen it isolated, and we have replied to the show cause notice, but we are yet to receive the reply. So that's why I'm asking the question. And I also have another. Sorry.
I agree with your view.
Yeah. So I also have another question. In case of common credit, is it mandatory to apply Rule 42 and reverse only the proportionate credit which is resulted at the end of that rule, or do the taxpayer also have freedom to avoid all these workings and completely forego the common input tax credit?
You can forego the common input tax credit. It's not compulsion that you have to mandatorily avail, right? You can report it as ineligible, and you can avoid it.
Okay, so if the taxpayer,
when you talk about restaurant sector, one of the clients where we're handling restaurant sector, capital goods credit is a cumbersome process to take the credit. You rather would like to charge it off and claim depreciation. So yeah, those cases, it's not a compulsion on you to claim it and then reverse.
Okay, so the taxpayer always have freedom to avoid all the unnecessary or tough workings, and he can completely forego.
Yeah. GST itself is tough, so
okay. Thank you.
Yeah. Great. So Mani, I'll move ahead with the further slides.
Yeah, there are few more questions, Radhika.
Yeah, maybe we'll take it up in the end as the time permits.
Okay. Better.
It was just a break, kind of a bio break and other break for the participants. We're now coming back again to the rate notifications. My God, what changes? So actually the tsunami of changes have happened in these rate notifications, be it services, be it goods. There are a lot of changes which have happened over here. I have not been able to align my slide in that order of the amendments which have happened, but the notifications have been issued right from notification number 3 of 2022 to notification 11 of 2022. These are the various notifications which have been issued. Let me straight away take it into the slides. So notification number 11 of 2022, basically this talks about, this is withdrawing the concessional rate of tax which was given by notification number 45 of 2017, when the supplies was made to public funded research institution or the departments and laboratories of the central government or research institutions. When you made supplies of certain commodities, prototypes, accessories, computer parts, etc., to these departments, the rate of tax was 5%. So this was a concessional rate of tax depending upon the recipient of your supply. Now this has been withdrawn with effect from 18th of July 2022, meaning that the normal rates which are there as per the tariff, those rates are now going to apply. So a lot of emphasis in this basically council meeting is on rate rationalization or removal of those exemptions which are not really necessary. So those are the kind of amendments which you will find which have happened. When it comes to reverse charge mechanism, goods transport agency, the reverse charge mechanism has undergone slight change, has undergone a lot of changes, goods transport agency as such. So we'll discuss that as a matter of separate slide. But yes, so this is one change which has happened under reverse charge notification. Second change which has happened in case of reverse charge notification is regarding the government related services. So this is a procedural kind of a change as far as reverse charge is concerned, because concerned exemption entry has undergone a change as far as postal department services are concerned. So only if you remember earlier, the postal department services which were speed post, express post, these were liable to GST or service tax. Now that has been done away with, and even ordinary post, etc., are all liable to GST. So all the services by the postal departments are now liable to GST. So instead of saying that excluding postal department services of express post, express parcel services and all of it, it just says Department of Post. So that kind of a minor edit has happened as far as reverse charge notification is concerned. The most important change which has happened under the reverse charge notification is the residential dwelling. So there is a new entry which has been inserted under entry 5AA for service by way of renting of residential dwelling to a registered person. So if you are, if any person, whether that person may be registered under GST or not registered under GST, irrespective of that fact, if he or she, if that person has rented out a residential dwelling to a registered person, in that case, there would be GST which would be applicable under reverse charge mechanism, and the registered person needs to pay the tax. So this is where the reverse charge notification new entry has been inserted, entry 5AA. We look into it a little detail in the ensuing slide. For now, just hold on to these three changes which have happened under reverse charge notification. Now comes with regards to postal department, as I was telling you, that the speed post, express parcel post. So these are the changes which have happened. Now we are moving to notification 12 of 17. So first we discuss the withdrawal of notification number 45 of 17. Then we discuss the changes which have happened under notification 13/2017, which is the principal notification for reverse charge mechanism. Now we are discussing the amendments made to notification 12 of 2017, which is the exemption to services. So under entry number 6, what they have done, they have deleted this by way of express post, speed post, etc. So therefore, services by the central government, state government, excluding the aforementioned services by Department of Post. So all the services by Department of Post now become taxable. However, they have inserted another entry, entry 24C, wherein services by Department of Post of postcard, inland letter, book post, and ordinary post, envelopes weighing less than 10 grams. So envelopes which are weighing less than 10 grams, those are exempted from GST. In all other cases, all the services given by the Department of Post are now liable to tax. Okay, now entry 12, which we were discussing about residential dwelling. So, renting of a residential dwelling for use as a residence. If you want to look up into the meaning of for use as residence, I have not put it here, but you can go back to the service tax education guide, which clearly specifies what is for use as residence. So that clarity can be taken from the service tax guide. But when you rent out a residential dwelling for use as residence, until today, this was exempted from GST. It was exempted from service tax as well. It is exempted from globally from VAT or GST. Probably India must be the first country to be taxing a residential dwelling for use as residence, and that also now under reverse charge. So when you are renting it out to a registered person, in that case, it is liable to tax under reverse charge mechanism. Now, what are the issues with regards to this? Firstly, whether the input tax credit would be allowed to the recipient, whatever you have paid the tax under reverse charge. The first question which will come to your mind is that whether they will say that this is for the purpose of personal consumption and therefore disallow the credit under section 17(5)(g), or whether the credit would still be eligible even though I have paid it under reverse charge mechanism. The second question, which we were just discussing before the session started, Sambamurthy sir and me, is with regards to the tracking of these kind of transactions, because there will be a lot of sole proprietors who obviously would be living in a residential dwelling which is taken on rent. So in that case, again, reverse charge has to be applied. Although they are sole proprietors, they are registered under GST. Whatever personal rent, whatever they are incurring for their purposes itself, their family purpose itself, is now going to become liable to tax. Though the idea by and large was to tax the guest houses which was taken by the corporates, but in between you also have the sole proprietors, partnership firms, which are now going to go into this issue. Now, two case laws which I would one is the advance ruling which I would like to highlight, and the second is the case of PricewaterhouseCoopers by the Sestat regarding claiming of the credit. Now, Messrs. Kasturi and Sons Advance Authority ruling Maharashtra, and similarly Borbetta case in the case of West Bengal Advance Ruling Authority, clarified that the exemption was not the service recipient. It was what you were giving, what was the supply of the service, whether it was for use as residence or whether it was for some other purpose. So it was not the recipient of supply. So they said that in this case, if it is given to a corporate, but that particular unit is going to be used for the purpose of residential dwelling, then in that case also GST will not apply. Now, this is probably what triggered the amendment in the GST law. According to me, if the ideology was not to deny the credit, then there is no point in getting this under reverse charge mechanism. Because if you know that you would be paying the tax and then being able to claim the credit, then the government would have not gained much by doing this exemption. So therefore, the intention definitely to me appears to be that of denying the credit. So there, what comes to your rescue is the case of this PricewaterhouseCoopers, which is there, wherein it is very clearly given on going through the policy of a company. So therefore, it is very important that you suggest to your clients to have a policy document in place when it comes to using of these guest houses for your for the employees, or for the directors, etc., whatever. Have a proper policy in the company. So therefore, in that case, it being a business expenditure, definitely it cannot be said to be for the personal use or personal consumption, and the SENVAT credit cannot be denied to the appellant, is what was held in this case. So this case can very much be used even in the scenario of GST. Now, the next amendment which has happened with regards to services again is the removal of exemption when it comes to hotel accommodation services. Again, a lot of hardship where the unit accommodation price is 1,000 rupees or less per day. So now, under the revised scenario, if you look at how the hotels are going to be taxed, if the value of supply of a unit of accommodation is less than or equal to 7,500 per day, the tax is 12%. So 1 to 7,500, it would be 12%. Value of supply of a unit of accommodation is more than 7,500 per day, tax would be 18%. So this is going to actually bring out a lot of those small, medium hotels also into the tax net. Not only hotels, the lodges, etc. Now the next one is entry number 15, entry 15, which is amended with regards to the transportation of passengers in economy class. So again, if you are traveling by business class and the flight emanates, embarks or terminates into any of these northeast airports, then if it's by economy class, it is exempted. If it is by business class, it is taxable. Honestly, these kind of minor changes in the law increase a lot of compliance burden on the assessee, which the government does not realize at the end of the day. The law has to be simple, it has to be fair, it has to be transparent. Yes, there are certain transactions which really need to be brought out into the tax net, but these kind of small changes of business class, economy class, then the residential dwelling, these are going to create a lot of hardships for the assessees in times to come. Then there are exemptions which have been modified with regards to storage or warehousing. Storage or warehousing, there are a lot of changes which have happened for this industry. Particularly if you look at storage or warehousing now, only of cereals, pulses, fruits and vegetables is exempted from GST. All other cases, if there is a storage or warehousing, whether it is a raw vegetable fiber or whether it is spices, copra, etc., all this is going to be now taxable. So therefore, once you increase the cost of storage or warehousing for cotton fibers or jute, etc., definitely the cost for textiles is going to increase. Then you have the most talked about exemption entry, which is withdrawn with regards to hospitals. So proviso to entry number 74, which is the healthcare services exemption, says that provided nothing in this entry shall apply to service provided by clinical establishment by way of providing room, having room charges exceeding 5,000 per day to a person receiving healthcare services other than ICU, CCU, ICC, and NICU. Now, according to me, it's not just as simple as that you have to pay tax on this at 5%. The hospitals have to get registered. They have to pay tax at 5% on the room charges which they are charging to the patient. The fact that they are supposed to now register means that they are supposed to then start reporting their exempted turnovers also into the GST returns. They need to keep a track of the input which they want to avail, if any they want to avail. They have to keep that track. And most importantly, now comes the question whether e-invoicing would be applicable. Now, why this question struck me was basically when you look at hospital industry, we know majority of the times it is driven by insurance. So therefore, if you look at the motor vehicle insurance entries under section 17 of the GST, the credit has been allowed for motor vehicles repair and maintenance to the motor vehicle insurance entities. So in a similar manner, will the credit be allowed to the healthcare insurance providers in case of the room rent which they have paid for the patient? And if so, if the credit is to be allowed to them, and also the fact that they are the person liable to pay the amount, so they become the recipient of service, similar to the case of motor vehicle insurance, and accordingly e-invoice has to now be generated by the hospitals. Now this is my honest further deliberation on this entry. I'm open for views. Once we finish this by raise of hands, we can discuss if you have any other views. But I think hospitals have to also evaluate these aspects when it comes to room rent. Again, amendment for training or coaching. I think already we heard a lot that in India, there is hardly any encouragement for sports or art or culture in today's time. I honestly did not favor this kind of a move where you say that art culture, if it is given by an individual, the training or coaching is given by an individual, then it is exempted. in case of art, culture and all, you should understand who's receiving it. Receiving it is ultimately an individual. So therefore, rather than keeping it supplier specific, they should have kept it recipient specific. And when you keep it recipient specific, obviously, then you should not have removed this exemption at the first place. Services, this is FIFA Under 17 World Cup, as and when it is rescheduled, that would be exempted. Certain exemptions now, so we are talking about the exemptions which were modified, and now we're talking about exemptions which are withdrawn by the government department. Services which are given to Reserve Bank of India, services which are given by IRDA, SEBI, FSSAI, GST, all of them are now liable to tax. The idea was that, if they are not paying tax, they are still blocking the input tax credit. So it is ultimately going into the cost. So rather than that, they have brought all these regulatory authorities also into the tax net. Then other exemption entries which have been withdrawn is with regards to fumigation of agricultural produce. So as I said, storage and warehousing industry has undergone considerable changes. Slaughtering of animals liable to GST. Services provided by cord blood banks of stem cells is liable to GST. I do not really see the reason for one to apply GST on entry 73 again. Entry 75, services provided by operators of the common biomedical waste. By and large, what I felt the mentality, if you look at the amendments which have happened, they're like, bhai, itna paisa hai ki tum business class se fly kar sakte ho, so then you pay GST. If you have so much money that you want to preserve your cord, stem cells, you have a lot of money because you're paying for that, right? So then you also pay for GST. What is the harm? The mentality is kind of that when you look at the changes which have happened, which I do not personally agree, because you may be having a lot of money for the purpose of traveling by a business class, or say the cord blood cells or whatever. But look at the compliance issue when it comes to the to the supplier. What kind of compliance issues it raises over there? And obviously, as a country, what do you want to encourage? Entry number 75, services provided by operators of common biomedical waste treatment facility to a clinical establishment. So again, facility, when you are providing biomedical waste treatment facility to a clinical establishment, these were earlier exempted. So that is being withdrawn and now taxable at 12%. So again, going to increase the cost of the healthcare industry. Now the last bit is the new exemption entry which has been added, which is with regards to foreign tour operator services. So wherein you have a consolidated package of the tour which commences from outside India and continues in India and beyond, then in that case, for that package, how are you going to compute which part of that tour has happened within India? And that part which is outside India will be exempted, and that part which is in India will be taxable. How will you compute it? Duration of 12 hours is considered as one full day, less than 12 hours is considered as half day. So all that computations have to be done for you to know how much is exempted and how much is taxable. Right. Now moving on to the key amendment which has happened with regards to Goods Transport Agency. Now this agency, Goods Transport Agency services, a major change has happened, a revamp kind of has happened to this entire sector. And the biggest blow is the withdrawal of the exemption entry which is there with regards to the 750 and 1500 rupees, which was an age-old exemption which was being carried out. That exemption has also now been removed when it comes to the GTA. So now GTA, to say there are three options which a goods transport agency has. Let us divide it in step. So one is the goods transport agency either decides to pay the tax under forward charge or decides to pay the tax under decides to go for reverse charge mechanism. Now, if it goes for the forward charge mechanism, it has two options. One, it can decide to pay tax at 5% without availing input tax credit. Two, it can pay tax at 12% by availing input tax credit. Third, case where it is liable to be taxed at under reverse charge mechanism, the tax has to be paid by the recipient at 5%. So that is clear. So when it comes to the tax to be paid by the recipients, there are 7 categories of recipients, as we know: body corporate, factory, etc., who are required to pay the tax under reverse charge mechanism. Now it is an option which has been given. So goods transport agency has to now decide which option it wants to go for at the beginning of the financial year. So each year it has to decide whether I will go for forward charge or reverse charge, whether under forward charge I will go for 5% or 12%, and accordingly make a declaration in Annexure 5 on or before 15th March of the preceding financial year. So this declaration has to be submitted to the jurisdictional officer, stating that I exercise the option for payment of tax under forward charge. If you exercise, whether it is at 5% or 12%, in both the cases, you have to make a declaration. When it comes to this particular time, because this is applicable from 18th of July 2022, the goods transport agencies have been given time until 16th of August 2022 to submit their applications or declarations before the jurisdictional officer. However, the rate which they have to apply will be effective from 18th of July 2022. That is not going to be from 16th August 2022. They have time to declare until 16th August 2022, but they have to exercise that option on the 18th of July 2022 for all the supplies made thereafter. So this is the key change which has happened under GTA. And the reverse charge mechanism notification 13 by 2017, which is amended by 5 of 2022, has an Annexure 3 which says that what declaration should be given by the goods transport agency if it wants to go for forward charge. So it says that the goods transport agency has to give as a declaration that we have taken registration and have exercised the option to pay tax in relation to transport of goods supplied by us during financial year under forward charge. So that is the declaration which the goods transport agency has to give. It does not have to tell that it is going for 5% or 12%. It just has to mention that it is going under forward charge under the consignment note. Okay. Now the amendment also, which I told you with regards to the withdrawal of the exemption of 750 rupees or 1500 rupees. So these exemptions are no longer applicable. Yes, if a goods transport agency continues to make supply to an unregistered person, in that case, they are not liable to tax. That exemption continues. But when it comes to value-based exemption for GTA, that has been removed. So all of this will be liable to tax. Works contract service, rather to say what all entries have been removed under works contract service, entry 3 of notification 11 of 2017, you know, there were a host of entries where the tax was liable to be paid at a reduced rate of 5% or 12%. So what they have done is that they have rationalized the rate and they have made it at 18%. So by and large, almost all the entries in that entry 3 has been removed, except when it comes to the real estate sector, which has special rates. Apart from that, there are 3 entries. One is with regards to the oil and gas exploration, where the rate continues to be at 12%. Then in case the subcontractor provides services to main contractor, where those services are being provided to the central government or state government, the rate has been increased from 5% to 12%. In case of earthworks, where composite supply of works contract, which involves earthwork majorly, and is provided to the central government, state government, UT or local authority, the rate of tax has been increased from 5% to 12%. So these are the only reduced rate of tax now available under entry 3. Your historical monuments, your affordable housing, your Jawaharlal Nehru Mission, Awas Yojana, all those have been removed. Nothing remains. These are the only exemption and reduced rate of tax entries which are available. The other changes which have happened in rate notification with regards to the transport of passengers by roadways is taxable at 5% without ITC. Earlier, this was taxed at 18% with ITC. Similarly, transport of goods by ropeways was also taxable at 18%, which is now reduced to 5% without ITC. Renting of goods carriage. So renting of goods carriage by a goods transport operator is liable to tax at, is exempted from tax. But renting of a goods carriage otherwise with the cost of fuel is liable to tax at 12%. Support services, it is clarified now that goods transport agency does not come under the heading 9967. It comes under 9965. And 9967 only takes care of support services to transport, which is taxable at 18%. Services provided by foremen of a chit fund, the rate of tax has been increased from 12% to 18%. So the commission, whatever is earned by the foreman of the chitman, is now liable to tax at an increased rate of 18%. Job works in case of hide, skins, leather goods, etc., the rate of tax has been increased from 5% to 12%. So these are the changes which have happened when it comes to the rate notification. As far as services are concerned, the changes which have happened in terms of the exemption entries, in terms of the rate rationalizations which have happened. Now we finally look at those changes which are with regards to the goods. Goods, the major amendment which has happened is with regards to pre-packaged and labeled goods. When you look at pre-packaged and labeled goods, earlier before the amendment, the taxability was dependent on whether or not it was a registered brand name. So if the goods were bearing a registered brand name or were bearing a brand name which was enforceable in court of law, in that case, it was liable to tax. In other cases, it was exempted from tax. Now, the modality of exemption has been moved from brand name to whether it is pre-packaged and labeled goods. So, if it is a pre-packaged and a labeled goods, then it is liable to tax at 5% or in some cases at 12%. What do you understand by pre-packaged and labeled goods? So what it says is a pre-packaged commodity means a commodity that without the purchaser being present, is placed in a package, whether sealed or not, that the product contained therein has a predetermined quantity. So even in absence of a purchaser, that commodity is packed. It may be sealed, it may not be sealed. It has a predetermined quantity and it is pre-labeled as per the Legal Metrology Act. As per the Legal Metrology Act, you are required to affix the declaration on those commodity. Whether you have affixed it or not is not the criteria. You are required to affix is the criteria. So you may say that, okay, I don't want to comply with Legal Metrology Act and I will continue to claim exemption under GST. No. If you are required to comply with the declaration under Legal Metrology Act is what you're required to see. Whether you're complying or not is not what you're required to see. So therefore, twin conditions now. It is pre-packed and it is required to bear declarations under Legal Metrology Act. The concept of brand is removed. That entire concept of brand name is removed, and now we come to this. Now there are certain conditions which are there under Legal Metrology Act when it comes to declaration. Under the Legal Metrology Act, you are required to declare, if at all, the quantity is less than or equal to 25 liters or 25 kilograms. So if it is more than 25 kilograms or 25 liter, which is a bulk quantity, then you are not required to give declaration under the Legal Metrology Act. So if you look at the scenario, if the specified commodities are sold in loose form, they are exempt. If the specified commodities are packed only in presence of the buyer, they continue to be exempt. If they are pre-packed and labeled up to 25 kg or 25 liter, they are taxable. If they are supply made to an industrial or an institutional buyer where Legal Metrology Act does not apply, it is continuing to be exempt. These are the various commodities where the tax rates have changed, which have got impacted because of this pre-packaged and labeled goods. So when you look at paneer, honey, curd, buttermilk, wheat flour, all of those have got impacted. Now, the major thing which as chartered accountants, which we have to keep in mind when it comes to advising these particular assessees is regarding the anti-profiteering. Because the direct impact of this is going to be on the retail inflation. The government is very clear that we are going to closely, NAPA is going to closely monitor that whether you are passing on the benefits, because earlier you were not entitled to take input tax credit. Merely because now they are taxable at 5%, you cannot jack up the price by 5%. You have to understand what is that profit which you have gained because of now being able to claim the input tax credit and pass on that benefit to the buyer. So therefore, because a retail inflation is involved in the picture, the department is very clear of having a close monitoring by NAPA of the anti-profiteering. Certain other goods, the rates have changed. For example, cut and polished diamonds, the rate is increased from 0.25% to 1.5%. Checkbooks, which were earlier exempted by banks, are now taxable at 18%. Solar water heater system rate is increased from 5% to 12%. So there are certain goods where the rates have been increased. Inverted duty structure, new commodities have been added where inverted duty structure will not, refund claim will not be entertained. So under all these HSN codes or the tariff headings, you will not be allowed to apply for a refund under inverted duty structure, although there may be an inverted duty in the particular scenario. Right. So with this, we come towards the end of the amendments which have happened in the rate notifications as far as the changes in the 47 GST Council is concerned. Any questions here on we can take on this particular section?
Yes, Radhika, we have some questions
Yes, yes,
in Q&A. I don't know whether they're related to these topics or not, but there are some questions. I think you can read from after Preetham Mahankali.
Shri Hari, hi, good evening. Are there settled case laws or events where misclassification of HSN code is rectified before issuance of SCN and the SEC pays the differential amount? To be more specific, an assessee who charged at 5% earlier later come to know correct rate is 18%, pay the differential. Show cause notice is issued for payment of interest in differential amount. So yes, obviously the show cause will be issued for payment of interest of differential amount. Mere payment of tax would not be sufficient. In fact, penalties also would then be applied. If you would have paid it before show cause notice, then you could have avoided the penalties. Then we have Urvisha, if lessor is already registered under GST and collecting it for rent of residential property from lessee company, then what? The lessor, the person may be registered, the lessor may be registered under GST. The criteria for reverse charge is whether the lessee is a registered person. So if the lessee is registered person, then in that case, in that particular case, the lessee has to pay the tax under reverse charge. Irrespective that the lessor is registered under GST, the lessor may at the max report this as a reverse charge transactions when they file their GSTR-1. Abhinav, if I am a director of a company and my company is registered under GST, I am taking house on residence as rent. Abhinav, the question, the answer would depend on who is paying for the rent for that residence, whether the company is paying the rent for that residence, or you are paying for that rent in your individual capacity. If you are paying for that rent in your individual capacity and you are not registered for GST, then the GST would not apply. But if the company is paying the rent for you and you are being given that accommodation in the capacity of the director of that company, then yes, reverse charge would apply. Credit can be taken as per my view. In case of residential dwelling, if a residential flats are taken on rent by RBI, then will RBI government pay tax on the landlord? RBI or the government will pay the tax, whoever is registered person. So now that you know that RBI is also required, may be required in multiple cases, they may already be having the GST registrations. So in that case, they will pay the tax under reverse charge, not the landlord. Abhinav, it's from your personal account, and reverse charge will not apply. So these are the questions in the chat box. Any raise of hands, Mani?
No, Radhika, nothing.
Okay.
We can continue. There is one raise of hand. I'll allow him to talk. Subramaniam. Yes, sir, you can talk now.
Yeah, I have two questions, madam. The first question is that you told me in GTA, 5%, 12% under forward charge. That is the one option, correct? Can the GTA charge one type of assessee 5% and another type of assessee at the rate of 12%?
No, no.
Can you do it 5 and 12%? That is the first question.
Yeah.
The second question is in respect of healthcare services, room rent exceeding 5,000 rupees. Ma'am, this notification is not against the provisions of the composite supply. Can the notification go beyond the act? Say the act says what is a composite supply. In a healthcare services, providing a services is, is a major supply, is a principal supply. Room rent is only a auxiliary supply of services. So in such a situations, whether these notifications will be valid because it is against the provisions of composite supply, it against the provisions of section 8 of the CGST Act. These are all my questions, ma'am. Two questions.
Yeah. So with regards to the first question, the GTA has to follow one option at the beginning of the financial year. So either he goes for forward charge 5% or forward charge 12%. And that option he has to recognize at the beginning of the financial year itself. And accordingly, report the transactions. The notification does not want him to tell that it is 5% or 12%. But according to me, he cannot follow two perspectives, because then he would be, basically having certain transactions under reverse charge at 5%. What input tax credit he'd be able to take, as per me. Is there any other view, Money?
Ma'am, my question is here. My question is, he is only opting option 2. That is 5%, 12% option 2. The 5%, 12% option 2, both are forward charges. 5% is also forward and 12% is also forward.
Correct.
But can he select one type of assessee he wanted to charge at the rate of 5%? Another type of assessee he wanted to, another type of a customer he wanted to charge at the rate of 12%. Can he go 5 or 12%? No doubt, he has opted only option 2. Option 2 he exercised. In option 2, there are two forward charge rate, 5% and 12%. Can he opt one type of assessee 5%, another type of assessee 12%? Or he has to opt only one rate? That is my question, ma'am.
According to me, he can opt only for one rate, whether 5% or 12%, whether with input tax credit or without input tax credit. That is my view. But I'll before the end of the session, I'll once again go through and confirm to you. Money also confirms
it is linked to ITC, right? So he has to choose one option only at the beginning of the year. So since 12% is applicable with ITC benefit, so if he is choosing 5%, means he has to be under 5% without claiming ITC. So like that. So you can't say that I paid for one transaction 5% with ITC and another transaction 12% with ITC, like that. So
sir,
it's for entire financial year.
Yeah, sir. The issue is 5% is an exempted supply because of section 17. It is an exempt. 17.2 also says that it is an exempted supply. So therefore, under reverse charge mechanism, it is an exempted supply. Forward charge mechanism, I am eligible to claim the credit. Why I should not opt for 42, 43? So 5% is an exempted supply because it is a reverse charge mechanism. The entire service is the recipient is liable to pay at the rate of 5%. That I opted. Another one is 12% rate of tax. Another is 12% rate of tax. That also I opted. Each and every month I am taking the credit and following the rule 42 and 43.
Let me let me just look at that aspect.
Sure,
I haven't looked at it, but I'll get back to you on that before the end of the session. Okay, so that was the one question which you asked. And regarding composite supply, I think it's going to be debatable. It's going to be debatable, especially the fact that you have removed the exemption entry specifically, and you have made it taxable at taxable above 5,000. So I think proposition to take it as a composite supply will definitely be litigative.
Thank you.
Yeah, but yes, it is a valid point. I do not deny on that point that it is a composite supply, because some of the procedures are day procedures, some of the procedures require the patient to stay back, and they are given as a complete package. So the better thing according to me would be to give it as a package rather than separately bifurcating the room rent. But then at that point of time, you might also get into the risk of mixed supply if the department goes into that aspect, that there is a single price and it is a mixed supply. That is also another risk which is there. Is that okay, Subramaniam ji? That's fine? Yeah. Okay. Now, clarifications issued by CBIC. We move on to the next part of the discussion, which is regarding the clarifications issued by the board. Clarifications which was issued by the board with regards to the refund of taxes paid by the retail outlets established at the departure area. That has been now removed because that provision itself has been removed as of now. Recently, I'm sorry, Mani, anything?
No, I think some.
Just one moment.
Radhika, you can continue, Radhika. Yeah.
Okay. So recently also, if you look at the news, there is a news that the department has started to look into refund of taxes to the foreign tourist. So whatever the tourist refund scheme which is there in the law as of now, but very much not operational, that they are planning to operationalize. So I think the scheme is going to be revamped. There was a lot of confusion which was there when it came to the taxability of goods sold at the retail outlets at the departure area, because the departure area of the international airport was very much within the definition of India, and therefore it was liable to GST. The supply which happened was liable to GST. So currently they are probably going to revamp the modus operandi of this, and we have to wait. The other circular 175 is regarding the export of electricity. So India definitely has started exporting electricity in terms of renewable sector to the neighbors, and electricity transmission and generation of electricity, though exempted from GST, but when you export, then you are entitled to refund of tax. So therefore, that mechanism has now been introduced under GST, and the circular has been issued with regards to that. Then we discussed about circular 174 when I discussed about GST PMT 03A. The circular specifies that the credit has to be deposited preferably within 30 days of the refund of tax by the taxpayer along with interest. So this is about the clarification issued by circular 174. Then we looked at the clarification issued by circular 173. The circular issued 173 basically about the concessional rate of tax in case of inverted duty structure. So that clarification also we have dealt with, that inverted duty structure will be allowed in case of concessional rate notifications also. So then we come to the two important circulars, which are for now open for discussion, which is Circular 172 and I'm sorry, I have not changed it, Circular 172 and 171. So Circular 172 discusses about miscellaneous issues under GST, which have been clarified. So the first issue which we will discuss over here is regarding Section 17(5) of CGST Act. If you look at Section 17(5)(b), the amendment was made and the clause was added as provided that the input tax credit in respect of such goods or service shall be available where it is obligatory for an employer to provide the same to employees under any law for the time being in force. Now the question was whether this particular proviso is applicable only to clause 3, because here what you are using is not a comma, you are using it below this, so whether it is applicable only to clause 3 or is it applicable to 1 and 2. So there the clarification has been received that it is applicable to the entire clause 1, 2 and 3. This particular proviso is applicable to all the 3 subclauses. Then comes your next clarification again on 17(5) with regards to leasing, renting or hiring of motor vehicles, vessels or aircraft. So the question here was whether the credit is being denied in case of leasing, or is this leasing to be read along with renting of motor vehicles and vessels and aircraft. So the clarification has been given that this is not just leasing of, say, immovable property, something like that, but this is leasing, renting or hiring of motor vehicles, vessels or aircraft. So that was another clarification which was given by the circular. The third one is the perquisites provided by the employer to the employees. This has been a huge matter of litigation. Staff welfare expenses which are being incurred, say for example, those staff welfare expenses are being treated as supply made by an employer to employee, though those staff welfare expenses are incurred by virtue of the the fact that the employee is working, is having an employment contract with the company, but a lot of show cause notices are issued on this count already. So this clarification is kind of going to help in all those cases, because it says clearly that perquisites which are given by an employer to an employee, all those perquisites are considered to be given in course of the employment services and are covered by Schedule 3 of CGST Act and are not subjected to GST. Though the corresponding implications under income tax have to be looked into, but as far as GST is concerned, these are not liable to tax in the hands of the employer. This became a big issue also to say perquisites for employer to employee also, because employer and employee have been defined to be related parties, and transactions between related parties have to be at arm's length or at open market value when the other party is not registered under GST and is not able to claim the input tax credit. So this gave rise to a lot of issues when it came to canteen services, when it came to transportation services given by employer, etc. Use of electronic credit ledger for payment of tax. So although it is amply clear, but then by virtue of further clarification, the board has said that electronic credit ledger can be used to make the payment of output tax. You cannot use this for making payment of anything other than output tax. And therefore, to reiterate that reverse charge mechanism, tax which you pay under reverse charge mechanism is not covered under the definition of output tax, and therefore you cannot make the payment of reverse charge mechanism using the electronic credit ledger. Use of electronic credit ledger for payment other than tax. So you cannot use the credit ledger to make the payment of interest or penalty or fee under the act. You can only use to make the payment of tax, and no other charges or penalties under the tax under the law can be paid. Further, electronic credit ledger balance cannot be used to make payment of tax under the hitherto laws. A lot of times question is asked, I have a balance of GST. Can I use this to make a pre-deposit of service tax? Can I use this to make the pre-deposit of excise duty? So there again, it is not permissible, because you can use it only for making payment of the output tax under the GST law. Use of electronic cash ledger, we have discussed extensively about the changes which have happened under section 49 subsection 10, and how the electronic cash ledger can be used for making payment of taxes within the SSE itself and within the distinct persons as well. Now moving further, now this is an interesting proposition when it comes to fake invoices. Fake invoices has been a subject matter of issue for a very long time under GST. And what eventually happened with so many fake invoices racket being busted by the department, it ended up actually collecting tax on one particular transactions from multiple persons, multiple registered persons. So then it gave rise to a lot of confusion as to whether, in what circumstances, do they have the authority to demand the tax under section 73 or 74 vis-a-vis the penalty under section 122. So with regards to this, the circular 171 has discussed 3 scenarios. We will look at each of these scenarios in detail. The first scenario, it discusses about a registered person A has issued tax invoice to another registered person B without any underlying supply of goods or services. Whether such transaction will be covered under the definition of supply under the CGST Act, and whether any demand and recovery can be made from A of the said transaction. Also, whether any penal action can be taken against registered person A in this case. So we must understand that the provisions of section 73 and 74 talk about non-payment of taxes, short payment of taxes, irregular availment of input tax credit. Now, the question of non-payment of tax or short payment of tax will come only when there is an underlying supply. If there is no underlying supply and I issue a tax invoice without an underlying supply, which is the primary allegation in this case, in that case, can I demand tax under 73 and 74? The answer to that, as per the circular says, and which is logical, no penal action under provisions of 73 or 74 is required to be taken against A. However, Mr. A shall be liable to penal action under section 122 to pay penalty of rupees 10,000 or an amount equal to GST evaded. So although he is not liable to penal action under 73 and 74, he will be liable to penal action under section 122 for issuing a tax invoice without any underlying supply. The second scenario which the circular discusses is B avails input tax credit on the basis of the said tax invoice issued by A. B further issues invoice along with underlying supply of goods or services to his buyers and utilizes the input tax credit on the basis of the above mentioned invoices for payment of his tax liability. Whether B is liable to demand and recovery provisions under section 73 and 74. So here the answer will be yes, because B has made a further supply of underlying goods and services. So therefore, section 7 read with section 9 is triggered, and there is section 73 and 74 can be invoked because ITC has been availed without receiving any goods. So under section 16 to B, one of the important conditions to avail input tax credit is to receive the goods and services. So B over here has committed an offense of not having received the goods and services and claiming an input tax credit merely on strength of a tax invoice. Therefore, penal action can be invoked against B under section 73 and 74, and B can be asked to pay the irregularly availed input tax credit. However, having invoked the provisions of 73 and 74, the provisions of section 122 cannot be invoked under on B, because as per section 75 subsection 13, no other penal provisions of the act can be imposed once you have imposed the provisions of 73 and 74. And therefore, he will be liable to penalty at 15%, 25%, whatever is the slab under 73 and 74, and not under section 122. This is the second scenario. The third scenario which this circular discusses is regarding B avails input tax credit on the basis of the tax invoice. B further issues invoice along without underlying supply of goods and services to Mr. C, and utilizes input tax credit on the basis of the above mentioned invoices issued by A. So this is a case we are talking of a circular trading of the invoices which is happening without the underlying supply of goods and services. So A has supplied to B without the invoice, B has availed the input tax credit, B has issued an invoice to C, and now C has availed the input tax credit on that basis. Whether B will be liable for demand and recovery of the said input tax credit under 73 and 74? No. The demand and recovery of either input tax credit wrongly or fraudulently availed by B in such case, or tax liability in respect of outward transaction by B to C, is not possible under 73 and 74, because first of all, there was no supply which was made by B which was liable to tax, and therefore whatever input tax credit which he utilized, if at all you say is utilized, is towards making a payment of something which was never due in the first place. So therefore 73 and 74 cannot be invoked, but the penal action can be invoked under 122(1)(2) and 122(1)(7. That is, one is that of issuing a fake invoice, second is that of receiving the credit under the fake tax invoice. So these are the provisions which can be invoked in the third case. Apart from this, the circular very clearly says, apart from this, one can also invoke prosecution and arrest against these offenders, because they have committed the offenses of issuing the invoice. They have committed or they have retained the benefits arising out of the offenses of issuing any invoice or bill without supply of goods, or has availed input tax credit using invoice or bill referred to above, or fraudulently availed input tax credit without any invoice or bill. So in these cases, apart from the penal action under section 73 or 74 or under section 122, the prosecution and arrest provisions will also be attracted under section 132, and depending on the quantum of tax evaded, the imprisonment can extend from 6 months to 5 years. Mani, I think with this I've come to the end of the presentation. I emphasize one point which I missed out during the rate notifications, is that because there is a rate change which has happened, do keep in mind time of supply provisions, wherein you are required to see the 2 of the 3 events which have happened, accordingly apply the rate change in rate of tax. So that is one thing which I missed out earlier. So I'm just clarifying that as of now, that do keep in mind time of supply provisions when it comes to change in rate of taxes. Yes, Mani, I'm sorry.
Yeah, there's one question in Q&A. Chandan, yeah, you can answer that.
Room rent advance taken on healthcare services. Later, room was cancelled. Processing charges were deducted for cancellation. Whether GST is payable on processing charges. As per me, the processing charges were liable to GST even today, because these are this would be considered, say, by the department in the nature of agreeing to tolerate the act or agreeing to the act of the cancellation of room. So those would definitely be liable to tax at 18%.
In the case of a residential rent paid by a registered person, you are telling the reverse charge GST is there. this residential rent paid by a registered person.
Yeah.
I am a registered person. I am having office on rent from an unregistered person. I am paying for my office to an unregistered person. Whether I am also covered or only residential rent?
No, only for residential dwelling it is covered. Office
Okay.
is not covered.
So all the commercial rents to unregistered persons are not covered.
Commercial rent by an unregistered person to a registered person is not covered under reverse charge mechanism.
Actually, they should have done that, but they have covered this residence because some case law would have come in against
sir,
them.
You can file one advance ruling, sir. Then after that, definitely they will amend the law.
Madam, my question is, proprietorship concern. They are doing the business, but they are paying the rent for the residents, to the owner. So this rent expenditure is not debited to the profit and loss account because it is not an expenditure incurred for the purpose of business. It is his personal, expenditure. So therefore, in the books of accounts, it is in drawing or it is not being debited to the profit and loss account. It is not being an expenditure incurred for the purpose of business. It is only his personal expenditure. In such a situation, even then, whether the proprietor is required to pay under reverse charge. You got my point, no?
Yeah, I've got your point. I think pretty much the liability is PAN based. So it is not based on whether you account it in your profit and loss account or not. Since you are a registered person and you are having a registration in that PAN and you are the one who is incurring that expenditure, whether it is for personal capacity as well, because that business for the business is not there in that entire definition. So therefore it will be liable to reverse charge as per me. And in that case, it will be difficult for you to claim the input tax credit.
I cannot claim
because will be triggered.
Yeah, it is my personal expenditure.
But say, for example, the same house, you say that it was taken for the purpose of your employees, for the accommodation of your employees, etc., who would visit, you would be entitled to credit in that case. I'm sorry, sir.
But first, is it a supplement? Because if you go through section 9, subsection 4, because it is coming only under section 9.3, correct? So 9.3 talks about, specific category of supply of goods or services or both, on which tax shall be paid on a reverse charge basis by the recipient of such a goods or services. Or is it first of all a supplement?
So when it comes to your lesser, definitely it is a supply because, again, the definition of business under GST is very wide. So from that.
But he is not in the course of business, he is not in the course of.
The definition of business, course of business, again, you are thinking of business from a normal business perspective. But the definition of business under GST is very wide.
Okay.
So there probably, these are the interpretational issues which are going to come, no doubt about it.
My basic doubt is recipient of such a goods or services. Am I a recipient of such a goods or services? I am not at all recipient of such a goods or services because I am not at all using it in my business. It talks about.
You're not using
by the recipient of such a goods or service.
You will be denied of input tax credit.
Yeah.
But because you are a registered person based on the PAN, you would be liable to pay the tax under reverse charge. You should use for business is not the criteria, no?
Okay. Thank you.
In fact, they want to tell that it is not for business purpose. The very objective of getting it is to say that it is not for business purpose.
Ma'am, I have a question regarding the suspension and revocation of GST. In one of my case, what has happened, the GST number has been suspended because of non-filing of the returns. Now we have submitted all the returns, including we have paid tax, interest, late fees, everything. But the officer has called us with regards to you come and meet us. So in that scenario, I think you explained us that if we have filed all the returns, it is deemed to be revoked now.
Yes.
But then what stand should we take in this case, ma'am?
So you can just simply make a letter based on the amendment which has happened in the law to the jurisdictional officer that based on this we understand that our registration is automatically revoked. So then accordingly, the necessary changes may be done on the portal.
Okay, okay, ma'am. Thank you.
Yeah. I think money with regards to GTA.
Yes.
There can be option where 5% and 12% can be followed at transaction level because the embargo is on choosing the option. Having chosen the option on certain transactions, if you pay at 5%, then you will have to follow rule 4243. 4243 for those transactions.
Yeah.
So that has to
Radhika,
be on the case-to-case basis. Yeah.
Yes, I just checked that Annexure 5 also, the declaration to be made. Yes. It only is talking about taking up the forward charge or the reverse charge. So once we take up forward charge, I think both the rates are applicable.
So, and if it is 5%, then you will not be allowed input tax credit. So it will be treated as exempt supply for rule 42.
42, 43. So I think,